Hello everyone, it's Vian from Forex Trading, and today I'm just going to be going over some of the current moves that we've had in the S&P 500 and the forecasts and possible trading opportunities going into next year. So this is actually Forex Trading's pro service, which is currently free for a few more days, so quickly go and sign up. There's no credit card or anything required to sign up, just your name and email, and you can get it for a few more days. You can find that on our website forextrading.co.uk, and you'll be able to navigate to the Pro Trader service. Anyway, so this is the move we forecasted on the December 22nd in the morning, and from this low down here somewhere we had three waves up onto this high, and it looked like we had a three-wave decline, and so I forecasted either a WXY at complete and we were seeing an ending diagonal for wave 5, or we could possibly see a larger correction which took place. What happened here was we had this three-wave bounce, and I was looking for one more high, and either that would complete a wave 5 or would actually see a three-wave decline here for a C wave, and that would then kind of confirm that we had a triangle. It wouldn't be 100% confirmation because markets never 100% confirm unless they've already made the move, but we have to look for the highest probability, and that's what I forecasted here on December 22nd. So let's go along. So we actually did have that three-wave decline. Let's have a look at that one more time. So I was looking for this three-wave decline or one more high, and look what we had, three-wave decline. So from there we were either going to have a zigzag with a three-wave, wave A, which is a modern type of a zigzag, not documented in Elliott's work, but I've seen it enough times to believe that there could be three-wave, wave A's in zigzags when B doesn't go above the start of, it's kind of like a flat zigzag combination, but if you would like to find out more about that, then you can just message us and I'll happily discuss this with you. Anyway, so we had this three-wave bounce for a possible wave B, and since we had a three-wave decline, we could either see a 1-2-1-2 count for further downside and a wave C, or we could see this triangle complete. And actually, let me just go back real quick. I labeled this two clear distinctive views, and a break above this red line, I think that's 2689.1, would actually invalidate this bearish case and prove the triangle. So we had the break there above the whatever the number was, I think, and this is actually my alternate count. So there was this, that was 16B, this is 16A, and this was my preferred count, that we were to see this triangle and see that final high come in place. And that was actually forecasted on December 28th. So let's see what happened. So the triangle did complete pretty much perfectly. One could have bought here with the stop low C, and if partial profits were taken at a 1-to-1, then you would have made money. However, if you held the trade, you would have been stopped out if you're looking for extended targets. That's why we always recommend moving to break even or reducing and then eliminating risk and then protecting profits as soon as possible. So I don't think it actually truncated. It made, I think, maybe 0.1 of a pip higher than the all-time high. So it made a new all-time high, and from there we saw a sharp decline. I just want to point out that I'm about to discuss my preferred view, but there is one more view that we're having a 3, 3, 5 for one more high, some kind of correction like that. We'd have to see a break of this level to see it take off further. confidence for that bullish case would be around this level here, but I don't really like that view, and I'm going to stick to the one that's working and that I've been forecasting for over a month now since I launched the service. So this final push high actually completed several degrees of wave 5, as you can see here, and there's actually more, but my chart keeps on breaking it because I have too many labels on my chart. So basically what's going to happen now is that if we see this as a clear 5-wave decline and we see a 3-wave bounce like this into the 618 region, holding below the 786 would be preferable. A bounce off the 618 would be ideal. If we see that happen, then that's going to be a great selling opportunity. Just make sure you know that this can come much lower and probably will before seeing a larger bounce, and I'm not going to sell until I see a larger bounce. I don't want to sell while it's going down so sharply. I'd rather see a bounce and get in on a correction to get myself a better risk reward profile, and also that's just the way my strategy works. So let's say we do see 5 waves into this region here, and we see this zigzag, which would be expected for a wave B or wave 2 here. From there, the way I'm going to trade this is that, where's my colors? Okay, here it is. So if this is a zigzag for a larger wave B or 2, then I'm going to have 2 short positions. One would be on the break of wave 4 here, the smaller degree wave 4, and the second entry would be a break below this B here. I could also get further entries if I take Fibonacci like this, and if I see a move into this 618 region here, and then a bounce holding above this, below this, sorry, and then I can get another entry on this wave B here, and then I'll be heavily short going into 2018, which I'm okay with and have been forecasting for quite some time now since I launched the service. But we have to remember this is a bull market, and we're going to need to see all that evidence before we actually do anything. That's the way Elliott waves work, that's the way markets work, that's the way my trading works. That you should always look for evidence and confirming price action before executing any trades. More confidence would be if we, let me remove that. More confidence would be seen if we break this wave 4 here, and then this wave 4, and then any other wave 4s. There's one here actually. You see what I mean by the chart breaking everything that I talked about earlier. This wave 4 right here. The more of these that break, the more likely that it will continue declining. So that means that if it breaks this one, I'll look for another entry, even though I've already got 2 or 3 shorts from up here. If I break this one, I'll short again a few more times, shorts, and then pullbacks, and then if it breaks again, short. So this is what I'm looking for going into next year. If I see a 5-wave move from here, and then a 3-wave correction, then again I'm going to go long. But I need to see that evidence first. I think there's probably a significant amount of divergence up here at the top. Yeah, there's a crazy amount of divergence. There's been divergence since this high back at the start of December. Ever since there, it's been crawling up slowly, and this recent high that it made, the all-time high that we were just talking about, has a crazy amount of divergence. If you have a look at that, there's divergence all the way from here. I just want to note that we could be looking at an ending diagonal of some kind, but the way that I've counted it works. And with Elliott wave, there can be multiple accounts that all work out, and you just have to get a feel for it. It takes a few years, to be honest, before you actually know how to count Elliott waves, at least in my experience. So yeah, that's it for the S&P 500 review. If you would like to see any more videos, then just have a look at our channel, have a look at our website, forextrading.co.uk. You can have a look at this pro service. As I said, it's free for a few more days only. But this, I think we've had over 90% accuracy over the past 2 months. You can find our track record on the forextrading.co.uk website. I think it'll be posted within the next 15 days. Yeah, that's all I have to say. Thank you. Bye.